And Todd, we just saw the industry pass the $10 trillion milestone and many billions of inflows of that going into other actively managed funds like Jay's, as you noted. But you point out that active ETFs have gathered approximately 30% share of the industry's flows. But stats show that supply at this point is now exceeding demand. And given the ETF industry has a history of being a little overzealous, maybe, when it comes to trends, is it different here?
Well, I think there's notable demand. As you talked about, 30% of the overall flows have gone into actively managed ETFs. We've seen product development on the active side this year through covered call strategies, some of those options overlay, active fixed income, active equity strategies. This is what advisors and investors are increasingly turning to. And it's very hard for an asset manager to bring to market a product that's going to compete with the Vanguard 500 ETF, VOO, that charges 3 basis points and has gathered about $80 billion of net new money this year. So asset managers are bringing products to market that we believe investors want, and it comes down to education. And we've seen a number of success stories in the past year. So the T. Rowe Price Capital Appreciation Equity ETF, TCAF, is one of those success stories that we've seen that the fund has come out and gathered notable assets in the past year, and T. Rowe Price obviously leveraging its expertise in the active management space.
And sticking with that, Todd, ETF AUM typically takes about 5 years to double, but this time it was less than 4 years. Do you see that pace continuing, and do you think that they'll continue to take share from mutual funds?
Oh, without a doubt, active ETFs and ETFs in general are going to continue to take share from mutual funds. This pendulum is not swinging back. We're seeing investor demand for ETFs, whether that's institutions that are getting more comfortable using ETFs, and products that are tied to the CLO marketplace are a great example. We've seen Bitcoin products have success in 2024. That's a different investor base that has now moved into ETFs. Retail investors are gravitating and becoming more comfortable in using ETFs. ETFs are here to stay, and we're seeing more and more traditional asset managers file and launch products because this is where the investor base happens to be.